Greetings and welcome to the Principles of Accounting course by StudySpace. In this video, we'll be studying about a trial balance, which is an essential part of our accounting system in order to create our financial statements as we studied in our first chapter. Now, the main purpose of a trial balance is to show us the account balances at the end of the year or the fiscal month. To show us the debit and credit total balances. And finally, to show us that these balances match and are equal to one another, so to prove that the accounting system is not flawed. Now, before we move on, we will be looking at a few errors that affect our trial balance. These errors can result in our trial balance being unequal or showing incorrect debit and credit balances. So these particular errors may not directly affect the trial balance, but at the end, they show us an incorrect balance for our debit and our credit statement. So the first error is not entering a transaction into the journal itself, which is the first step for any transaction. If a transaction is not journalized, then that means that transaction is not shown up in any of the books and therefore is of no use and has not been recorded. Furthermore, a journal entry may not be posted in the first place, which would result in the debit and credit column showing an equal balance but being an incorrect balance. Third, we have a journal entry being posted twice. This would also result in our debit and credit balance being equal, however, being incorrect. Then we have the error of incorrect accounts are used in generalizing or posting. This would mean that we have incorrectly debited a liability or credited an asset, which would result in irrespective decreases in both, or debited an expense as well as debited an asset, which would result in an increase in our accounts, but would also result in an incorrect entry, which would lead us to have improper results. So an incorrect accounts entry. Lastly, we have an error of offsetting errors are made in recording the amount of transaction. So this would mean that we have recorded the transaction with a lesser or a greater amount, thus offsetting the balance at the end. And this would show an unequal balance and would be detected easily within a trial balance. Now moving forward, we have an example of a trial balance. Here I will show you how to make a trial balance and what format is generally used for a trial balance and what these balances mean and how they are represented here in a trial balance. So first we will begin by laying a heading, and then we have our date for 31st December 2017. If we've been provided by a company name such as we have been here, we will use that before our title, Snogo Company, and we will make two columns for debit and credit. Now, as you can see that the equipment is a positive 88, that means equipment being our asset is going to be debit because it's positive, and all assets are positive when they are debit, as we studied in our previous video. Moving forward, we have owner's drawings. This is also going to be a debit balance because it is positive, and drawings are generally going to be a debit balance because they do not have a particular continuing balance, as you will study further in videos when we come to closing entries. Then we have account payable. As account payable is also positive, it will have a credit balance of 22,000. Then we have salaries and wages expense. So I'm just going to write salaries expense. This will have a debit balance since it is also positive for 42,000. Accounts receivable, also being positive, would have a debit balance of 4,000. Now our revenue is credit in nature because, as we studied, that revenue is an increase in capital, therefore this 95,000 will come as credit. Moving forward, we have, so I'm just going to write debit and credit here, picking the two columns again, and we're going to continue after that. So now we had our owner's capital. Owner's capital, as capital is credit in nature because of our accounting equation, we are going to write 20,000 here in credit. Now we have salaries and wages payable. This is also positive. I'm just going to write salaries payable, and we're going to have this as credit for 2,000 here. Then we have notes payable, again a liability that is positive, so we're going to have a 19,000 here. Lastly, we have our utilities expense, our prepaid insurance, and our cash. So I'm just going to debit them because all of these are positive and expenses are debit in nature, and our insurance is also an asset for us, and our cash is also positive, and since cash is an asset, it will be debit in nature. Now if we were ever given a balance such that our cash had shown a negative 7,000, then we would have credited it, showing a bank overdraft instead of a cash balance, because that would state that cash has been used to exhaustion and is no longer a positive amount, and therefore cannot be added as a balance of a positive nature. So that's it for this video. For more practice questions, you can always refer to the book, as it's got a lot of questions and is more extensive. So you can always practice questions from there to get a more concrete grasp of all these concepts that we have studied. We're going to be moving on to further topics in our next videos. So I hope to see you all there. Thank you.